Hello and welcome to tonight's event, Social Workers and Public Service Loan Forgiveness, brought to you by the National Association of Social Workers and Student Borrower Protection Center. Tonight's event will have closed captioning and the opportunity for questions will be available at the end of the presentation. If you have questions, please put them in the Q&A section and we will get to as many as possible after our presentation is concluded. Now, I would like to introduce Sarah Butts, the Director of Public Policy from the National Association of Social Workers, to provide welcoming remarks. Sarah?
Thank you so much. It's great to be here. Welcome and good evening. I'm Sarah Butts. I am a social worker and also the Director of Public Policy at NASW National Office, which is headquartered in Washington, D.C. On behalf of the Student Borrower Protection Center and NASW, I want to thank you for participating in tonight's webinar, where we're going to be discussing social workers and the Public Service Loan Forgiveness Program. We especially want to focus on the experiences and challenges with accessing public service loan forgiveness. I understand that we have over 1,000 participants, social workers, on tonight's call on this presentation, and that's really encouraging and exciting. I want to say a little bit about the profession, the circumstance that we find ourselves with high student loan debt and really minimal salaries, low salaries, and serving as a frontline provider workforce during the pandemic. The nation's 700,000 social workers are an essential workforce and have been serving on the front lines before and during the pandemic. We are among the most socially, racially, economically diverse mental and behavioral health and healthcare professionals, and provide critically needed services to millions of people every day in a broad range of settings that includes healthcare facilities, schools, child welfare departments, hospitals, community agencies, correctional institutions, courts, and in private practice. It's notable that during the pandemic, the number of individuals with mental health diagnosis has doubled. The stress and implications of COVID-19 have put an extra burden on social workers, many of whom are facing their own personal and economic challenges that include significant student loan debt. I want to just make sure that you all know that advocacy around student loan debt is a priority for NASW. This is an issue that we've worked tirelessly around. We've recently participated in meetings with White House officials and also the Department of Education and Coalition around student loan debt. I personally have participated in those meetings on behalf of our workforce. We've also supported legislation that would enable employers to pay for student loan debt for social workers. And this advocacy includes strengthening the Public Service Loan Forgiveness Program. We are really in a crisis as a profession whereby our salaries are low, between $47,000 and $51,000 annually to start. Educational and preparatory requirements are increasing. A master's degree is required to practice independently. That is the terminal degree for us. And the associated student loan debt is substantial. The Council on Social Work Education and NASW survey data of MSW students shows that there's an average of 68,000 to 76,000 total student loan debt. That is for MSW graduates for their BSW and MSW degrees. Recent new graduate data from CSWE shows that social workers of color are carrying much higher student loan debt than their white peers, with Black social work graduates' total student loan debt at around 92,000 and Hispanic graduates at 79,000. We can see that this is a racial justice and equity problem. It's also notable that an overwhelming majority of social workers are women, suggesting an unresolved gender pay gap that is further exacerbated by high student loan debt. The social work profession also has a significant number of first-generation graduates at all levels of academic training, many of whom did not have the support of parents and family to finance their required education. I will count myself as one of those first-generation college graduates. All of this said, the Department of Labor projects a 12% growth rate and demand for social work services as we look to the future. Obviously, student loan debt threatens our ability to recruit and retain social workers who are providing essential services, often to the most vulnerable individuals and communities. We're here tonight because we have a really unique opportunity now to advocate for student loan debt relief for our profession, especially for those social workers who have participated in public service loan forgiveness. Tonight, you're going to learn about managing your loans and also ways that you can help us to advocate for change. The Department of Education has requested public comment on the PSLF program. This is an opportunity as a profession to tell President Biden and the Department of Education to eliminate student debt for those who have worked a decade or more serving the communities that depend on us. Over 700 social workers have already submitted comments to the campaign that the Student Borrower Protection Center has spearheaded, where NESW is a partner along with the Council on Social Work Education, the Clinical Social Work Association, the Association of Oncology Social Work is also partners with many other groups. We need more social workers to submit comments as possible. I'd like us to see an additional 1,000 comments submitted. Congress created the Public Service Loan Forgiveness 14 years ago to alleviate the burden of student debt for dedicated public service workers. The idea was simple, that you work in public service for 10 years and have your remaining student loan debt forgiven. Unfortunately, this promise has been denied to social workers and other professionals. 98% of the PSLF applications have been denied loan forgiveness. That is significant. The nearly 150,000 PSLF application backlog is causing borrowers months of delay and uncertainty around repayment. And there's been outright mismanagement and abuse by student loan companies that have left hundreds of thousands deeper in debt and blocked access to PSLF, especially for those older federal loan borrowers. Many social workers signed up for the PSLF program and have completed the 10 years of public service and their loans have not been forgiven. I will share that this issue is personal to me. I actually participated in the PSLF program and experienced the poor administration of the program directly, starting when I was a worker in public child welfare and foster care in Baltimore County. I'm grateful to now have the opportunity to represent the profession in this advocacy, and I hope that you will join us and submit comments and push for action on this critical issue. I will now turn the presentation over to Mike Pierce, who is the Student Borrower Protection Center Policy Director, an expert in this area, and he's going to lead us through the presentation.
Thank you so much, Sarah. And if you'll bear with me just 1 second, I'm trying to share my screen here, and it's given me a little bit of a hard time. But I do want to echo a number of the points that Sarah just made. It's really incredible to be here, and thank you all for your service. We are very grateful for the opportunity to be able to help folks connect the dots in this incredibly complicated program that often leads public service workers astray. Thanks for sharing slides, Walter. I'll just talk through this and I'll tell you when to click through. And we, at the Student Borrower Protection Center, we've been working on a number of fronts to try to help people make sense of what's happened with public service loan forgiveness. That includes the really important advocacy work that Sarah has described. And that also includes work just like what we're doing here today. Opportunities to train frontline workers, public service workers across the country around how to make sense of this incredibly complicated and complex program and actually get the loan forgiveness that they're entitled to under the law. If you'll bear with me just 1 second, Walt, I'm going to switch over to my slides. I'm sorry, folks, bear with me just 1 second. Let me try this one more time. All right, so today we're going to talk a little bit about a few different topics. We're going to talk about the student debt crisis.
discuss how we got here, what this means for public service workers, and also we're going to talk a little bit about what we can do about it. I'm going to spend a little bit of time talking through the mechanics of public service loan forgiveness, what it is, what it means for public service workers to try to navigate this maze and actually get debt relief. And I'm going to talk about what's changed as a result of the pandemic. So borrowers have a handful of new opportunities and new rights because of the protections that have been afforded to them by Congress and by the past two administrations during the pandemic. But those are about to go away, and they also didn't help everybody. And then I'm going to warn folks, for people that are already on track for public service loan forgiveness, especially, about some late-breaking issues that are happening in the student loan market that might cause more trouble ahead. And then I am going to save some time at the end here for questions, because I know there's lots of technical and mechanical problems that people have when trying to access PSLF, and I want to make sure that we spend some time answering those questions, because I think that's really the best opportunity to help people connect the dots. So to get started, and I won't spend a lot of time on this, we are in the middle of a student debt crisis. And I think when I say that, it's not just that there is this incredible amount of outstanding student debt. There's $1 trillion more student debt today than there was a bit more than a decade ago on American households' balance sheets. And that means a lot of things. But for the people that are paying student loans, it's not just that there's all this student debt out there. It's that student debt is a bigger problem. It's a bigger kitchen table problem than it was a decade ago. Most of America, since the Great Recession in the past 10 years, has really deleveraged. They're either borrowing less or they're borrowing roughly the same they were 10 years ago, except for student debt and car loans. And student debt in particular has been the major driver of households' growing indebtedness over the past decade. And it's part of why you hear headlines about student debt. I know that you all feel it every day when you're trying to work and manage bills and manage your student loans. But really, I think a big part of what's driving the national attention to this is that people's finances just look different than they did 10 years ago. It doesn't have to be that way. And I think particularly for public service workers, Congress has made promises about what people's rights are under the law. And those promises were supposed to prevent unaffordable student debt from becoming a lifelong burden for anybody, but particularly for public service workers because of the public service loan forgiveness program. So I'm going to walk through what PSLF is at a very high level now, but then I'm going to spend a little bit of time on each of these specific components of the public service loan forgiveness program. I'm going to talk about what it means to have the right type of loan, the right type of repayment plan, the right type of employment, and what it means to make on-time monthly payments. And you have to do all four of these things every month for 120 months to actually connect the dots. And I don't want you to take away from this presentation that this is a good system. It's really quite poor. It's been run badly by the Department of Education under the past 3 administrations. This is a bipartisan failure. It has been really run into the ground by the student loan companies that have been trusted to handle public service workers' student loan accounts, including Fed loan servicing. And I'll talk more about that too. And I really don't want to separate this training from the advocacy opportunity here, because this is complicated and it is hard and it does not need to be this complicated and it does not need to be this hard. But with that being said, these are the basics here. This is your checklist to do a checkup on your student loans to make sure that you're doing the right things to stay on track under the current rules. The first important piece of information here is you need to make sure that you have the right type of loan. Only direct loans made directly by the US Department of Education, where the Education Department is your lender. These are the only loans that are eligible for public service loan forgiveness, but there are steps you can take to make sure that you get on track if you have any kind of a federal student loan. The good news here for folks that borrowed more recently that are on this call, basically the only kind of federal student loan that you could take out since July 1st, 2010 has been a direct loan. So if you never borrowed a student loan before 2010, you're good. The loans that you took out, the federal loans that you took out, with a limited exception around the Perkins loan program, but by and large, the federal loans that you took out are eligible loans for PSLF, and you don't have to worry about these other steps. The problem for borrowers with older loans, people that went to school like when I went to school, most of those loans back then were made by banks and other lenders like Sallie Mae, and they were guaranteed by the federal government. They were still federal student loans, Stafford loans, other kinds of grad plus loans, but they were typically made by banks. And if they were made by banks under this other program called the Federal Family Education Loan Program, FFEL or FFELP, you'll see that acronym on your loan form. Sometimes you'll see it on your student loan account. If you have that kind of a loan, you have to take this extra step to be able to get on track. And it's basically like refinancing. It's called a consolidation, but what it means is that the government will issue you a direct loan and pay off your older, not qualifying federal student loans so that you have a new loan that can be on track for PSLF. The good news is that you can do that. The bad news is that once you do that, you start from day zero, and all public service that took place before you consolidate into the direct loan program, right now, the education department doesn't count that. Part of our work here, part of what Sarah mentioned, is trying to get that to change, to make sure that borrowers get credit for their service, no matter what kind of loan they had and no matter when they took out their loans. And so we are working really hard to change this. But right now, the only way you can get on track for public service loan forgiveness, if you have one of these older kinds of loans, is to do a consolidation. There's a website on the slide. We'll provide these materials afterwards. But if you go to studentloans.gov, you can fill out a form to enroll in income-driven repayment and consolidate your loans all in one sitting. It's not complicated, but it's really, really important. The other thing I would note here for anybody that has loans that they took out to pay for their child to go to college, or grandkid to go to college, if you have a Parent Plus loan, you can pursue public service loan forgiveness. There's a step you have to take, the same step you have to take if you have one of these older kinds of federal loans. So if you took out Plus loans last year, you still have to take this extra step and consolidate. But if you do that consolidation loan, you can get PSLF for that based on your public service. So if you are a social worker and you borrowed a Plus loan to pay for your kid to go to college, by consolidating, you can get on track for public service loan forgiveness, and you can get loan forgiveness for your Plus loan. So we can talk more about that. People always have questions, but I did want to flag for this audience in particular, for folks that have used the Plus loan program to help their kids pay for college, you can get credit for your own public service and get your loans forgiven. The next important piece of information here, we talked about the right type of loan. Now, this is the right type of repayment plan. It's important to remember, again, that you need to do all of these things the same time every month. So it doesn't really matter what repayment plan you had if you have the wrong loan type. All that matters is what payment plan you have once you get into the right kind of loan. If you have a direct loan, the first payment plan you enroll in is the payment plan that matters. And the payment plan that you're in every qualifying month is the payment plan that matters. And I'm going to talk about income-driven repayment. And that is jargon that doesn't need to mean anything to you. If you are a student loan newbie and you have not spent any time with any of this complicated stuff, all income-driven repayment means is that your payments are based on how much you earn rather than how much money you borrowed. So the federal government actually doesn't care how much debt you found yourself in when you're done with school. As long as you fill out the right paperwork, they'll make your payments set based on how much money you earn. And if you're a very low wage worker relative to your family size, there's a formula for this. But as like a rule of thumb, if you're earning less than 150% of the poverty limit based on your family size, your payment is $0 per month. And then it's a share of your income above that threshold. And so for lots and lots of people that are working in public service, income-driven repayment will dramatically lower their monthly payment. And you make these income-driven payments to get on track for public service loan forgiveness. So this is like the engine that drives the public service loan forgiveness program. And to explain this a little bit differently, you want as much debt left over to be forgiven in 10 years as possible, because you want the federal government to deliver on its promise. You don't want to pay those bills. And the way you do that is to make the lowest monthly payment you qualify for under income-driven repayment. And if you pay exactly what you're required and nothing more every month for 10 months, anything that's left over will be forgiven. You also have some other options for repayment plans, but they don't actually lead to loan forgiveness. And importantly, the other kinds of options that would lower your payment significantly, extending your loan term out to 20 or 30 years, entering into what's called a graduated repayment plan, those don't generally work over the long term. And that means that really, if you're going to do a checkup on your student loans, make sure you're on track for PSLF, you really need to be in income-driven repayment. You need to stay in income-driven repayment as long as you can, ideally for that full 10 years. The next requirement here, and again, you have to check the first two boxes before you can check the third. If you have the right type of loan and you're enrolled in the right type of repayment plan, The government also needs to make sure that you have the right type of public service employment. So you have to demonstrate that you work for a public service organization. And there's some trickiness here for social workers that I'm going to talk about just for a second. But first, I'll start with the rule. The rule here is that if you work for a government organization, so that's any federal, state, or local government agency, any branch of the armed services, any public school district or public school, you are working for the government and you are good to go. And it doesn't matter what you do. You could be a lawyer, you could be an accountant, you could be a doctor, you could also be somebody that does bond trading for a municipality. I mean, it really doesn't matter what you do as long as your employer qualifies. That's also true if you work for a 501c3. Any function working for a 501c3 is considered eligible public service employment for the purposes of PSLF. Between just those first two categories, working for the government or the military or a school district and working for a 501c3 nonprofit, that's a quarter of all US workers. It's a huge chunk of the American workforce. And it's a lot of social workers, but it's not everybody. And I think that's an important thing to flag here. There are other kinds of nonprofits that people work for if you're engaged in certain specific professions that are listed in the rules for public service loan forgiveness. And then separately, there's an exclusion. If you're engaged in the provision of social work, but your employer is a for-profit agency, you're cut out of the public service loan forgiveness program. So this is some of the stuff that we're working to change. I want to flag that because there's some real injustice here. It shouldn't matter whether your employer is a for-profit or nonprofit company. You're performing public service. That's actually what the law says. It's the education department under the Bush administration that created this kind of false test about who your employer is. And as a result, lots of healthcare workers and other kinds of social services providers have been cut out of public service loan forgiveness just because their agency chooses to outsource, or the hospital they're working for chooses to outsource certain kinds of public service functions. So I'm going to tell you the rule here. The rule is if you work for the government or you work for a 501c3, you're good. If you work for another kind of nonprofit, you might be good. But if you work for a for-profit employer, if your agency is a for-profit agency, there's nothing that the public service loan forgiveness program can offer you right now, and we're working to change that. The other thing that I would flag is that you do need to be working full-time, and the federal government has a very funny definition of full-time. The government's definition of full-time is a minimum of 30 hours per week, as long as your employer is willing to call it full-time. And so you do need an employer to sign a form that says you are a full-time worker. And we've heard that lots of employers are hesitant to do that if, for example, for benefits purposes, for health insurance, you need to work 38 or 40 hours a week. They're not going to sign your paperwork that says you're a full-time worker if you're only working 30 hours a week, even though for the purposes of public service loan forgiveness, that's all that the government requires. That's a problem. It's another thing we're working to change. But right now, there's a lot of employer education that workers need to do just to get their management to understand the rules, to understand the program, to understand that it doesn't cost your employer anything to sign that paperwork. But if you don't get your paperwork completed, there's kind of nothing you can do about it right now. The good news, and I'll get to it in just a minute with some more detail, is that certification, that really only needs to happen after you've served the full 10 years. So if you have a manager right now that doesn't want to sign your paperwork, you should try to figure it out, escalate it, talk to somebody else in your organization, but you're not losing credit for your work. You could always go back later and catch up your employment certifications, particularly if you're early in your career. And then there's another particular issue around part-time work. You don't have to work full-time for the same organization. If you're currently working for multiple agencies or your social work is split across multiple hospitals, you can combine multiple part-time jobs. They don't need to be like a W-2 employee. You can be a contractor as long as across your different employers, you're working more than 30 hours a week. There's like a way to paper that over. So just know that there's lots of ways to cobble together a full-time public service career. It's all very complicated. It is needlessly complicated. And you can see why, in the way I describe this, that 99 out of every 100 people who've applied for PSLF have been rejected. It's because it is so complex. But it is possible to navigate this mess. And that's really what I want to leave you with today. Requirement number 4, and this is a thing that has really waylaid borrowers that have been pursuing public service loan forgiveness for a long time, particularly the first people to try to get on track for PSLF back in 2008, 9, 10, 11. the right number of payments means making what the government considers a full on-time monthly payment every month for 120 months. So if you're enrolling in a payment plan and you use a forbearance for a month, that doesn't count. If your employer makes a payment on your behalf and it covers the next 6 months worth of payments, that only counts as one. There's lots of little ticky-tack rules that were put in place at the beginning of the program that knocked a lot of people off track, and a lot of them have been fixed. So the rule about lump sum payments only counting as one, I mentioned that before, that's no longer true. Now your employer or a third party or even you can prepay your loans for up to 12 months and they'll count towards PSLF. That wasn't true even 18 months ago. There's lots of work that's being done, even by the Trump administration, to try to make this work a little bit better. I think we'd argue that that's really just picking around the edges. That's not the kind of change you need to see to make the program deliver on its promise. But it does mean that if you were somebody that tried to do this, couldn't figure it out 5 or 6 years ago because it was just too complicated, it is a little bit easier. We would encourage you to try to get back on track, and particularly because we really do hope that there's some big changes coming, and I'll talk about those in just a minute. So I've talked through those 4 requirements: the right type of loan, the right type of repayment plan, the right kind of employment, and the right number of payments. And again, each of those are complicated. There's tricks and traps along the way, but if you can check those 4 boxes and you can do it every month for 10 years, you will get your loans forgiven. And the good news is that there is a way to get the government to do a checkup on your student loan account. It doesn't always work. The contractor that runs it sucks. It's been sued by a bunch of law enforcement officials for cheating people out of their rights. There's a parade of horribles that has made the system not work properly, but there is a system now. And before 2012, there wasn't. People were just told to keep their pay stubs and fill out some forms later and hope that it would all work out. And as we all know now, for 99 out of every 100, it just didn't. And part of the reason the government created this process, this employer certification process, was because everyone knew, it was an open secret. Everyone knew this was going to be a mess when the first student loan borrowers became eligible to have their loans forgiven in 2017. In my last life, I was a regulator for the student loan industry at the Federal Consumer Financial Protection Bureau. And we warned the education department and we warned public service workers over and over again between 2013 and 2017 that this was setting people up for failure. And the Obama and the Trump administration in particular just didn't care. And they were willing to let this barrel forward, knowing that a generation of public service workers were going to be asked to pay the price for this failure. So that's a big part of the reason why we're pushing for change. But in the short term, there have been things done to try to help people figure out a way forward here. And this form, it's called an employer certification form, is a really big part of that process. The form's not required, but it's the thing that lets your account get a checkup from the government student loan contractor that handles this program, a company called Fed Loan Servicing, also known as FIA. When you fill out this form, this company determines if you have the right kind of loan. If you have the right kind of loan, your student loan company will change. So you might have Navient or Great Lakes as your student loan company. Once you fill out an employer certification form, your loan is going to move over to Fed Loan. And from now until you get loan forgiveness, Fed Loan is going to be your student loan company. They're going to determine whether you work for the right kind of employer. They're going to determine how many qualifying payments you've made. They're also going to do a checkup on the payment plan you're enrolled in and tell you whether or not you're on track. So all of the things that I just mentioned, all the things that you should worry about if you're on track for public service loan forgiveness, Fed Loan Servicing should do this for you. They should tell you, they should go through 1, 2, 3, 4 and tell you whether or not you're on the right track. They don't always do it. They often make mistakes, but that's how the process is supposed to work. This is the change that's coming on the horizon. This was a much easier presentation for me to give a year ago because the Department of Education is ending its contract with the company that's responsible for managing the public service loan forgiveness program. After years of Fed Loan Servicing screwing up public service workers' accounts, getting sued by government agencies and by individual borrowers, it's parting ways with the Education Department. And as a result, every single public service worker who has filled out that employer certification form before is going to have their student loan servicer change. We don't know who the new student loan servicer is going to be that's going to take over for you. In addition to the almost 2 million people that applies to, there's another nearly 7 million people that the same company handles, plus another million and change that are on the platform of a different contractor that's also leaving the program. And so 1 out of every 4 student loan borrowers, or 10 million people in total, are going to have their student loan company change in like the next 90 days. It is not going to go well. Historically, there have been really significant problems for people when these kind of large servicing transfer errors have servicing transfers have taken place, whether that's a mortgage servicer or a credit card company or a debt buyer or the United States Department of Education. It never goes well. And so we are encouraging people, knowing that this is about to happen, to just document everything. Update your contact information with FedLoan if you're currently there. Obtain any records they're willing to give you. There's a way to go into your student account and download your student loan repayment history and any other documents that are available to you. Take screenshots of the electronic messages you've had with FedLoan staff if you've had to complain about problems in the past and you haven't had an appropriate resolution. Also file complaints. So the Consumer Financial Protection Bureau takes complaints about the Education Department servicers. Lots of state attorneys general and state regulators also take complaints. We'll have more information we can share about this too. But the best way to protect yourself is to just create a record of the problems you're having with one of these companies' regulators. So that way, when things change, there's documentation that shows that you were right and this is the story, and there's not an issue down the road without call records or other documents that once lived at FedLoan and don't live anywhere anymore. There are still also, at the same time as this huge transfer is happening, some really big unanswered questions about what student loans are going to look like in a year. So I'm going to talk a little bit more about borrowers' protections because of the pandemic, but many borrowers, including everybody with a direct loan, have had their payments paused since March of 2020. That pause waived interest charges, it ended debt collection, it gave people with loans whose payments were paused credit towards public service loan forgiveness. It was a really good, hugely impactful thing that Congress and then the Trump administration and then the Biden administration did to help people weather the pandemic. It's been extended a bunch of times, including most recently until the end of January. As of right now, everyone's going to be expected to start repaying their student loans, 40 million people, on February 1st, 2022, right on the tail end of this huge servicing transfer. And with the administration's decisions about debt cancellation still way up in the air. We are working on a number of fronts to try to get everybody answers. We don't know if the payment pause is going to be extended. We don't know if Joe Biden's going to cancel student debt. We don't know if he's going to fix the public service loan forgiveness program. We don't even know who your student loan servicer is going to be. But we're asking the right questions, and that's why it's so important that, as Sarah mentioned at the top, you tell your story to the Biden administration, demand debt cancellation, tell them that you have worked for a decade, talk about how hard it is to be a social worker in the middle of a global pandemic, and we can get people's debts canceled before anyone has to pay a student loan bill. We also don't know if the student loan system can handle what's coming next when everything goes wrong all at once. That's not really actionable other than knowing to be ready and to watch carefully and to file a complaint with a regulator if you need to. But just know that we don't have a lot of confidence that these student loan companies like Navient are going to be ready to handle all of the chaos that's going to ensue when student loan bills start being sent to people in the early part of next year. This is where you come in. So Sarah and I have both mentioned a few times about the headlines, and I don't think you'd be here if you didn't know this already, but 99% of people who've applied to public service loan forgiveness were rejected in that first year. That's gotten better. Now only 98% of people are rejected from public service loan forgiveness. Congress actually passed a law to try to fix it, and 96% of the people that have applied to that new program have been rejected for public service loan forgiveness. It just doesn't work unless you are really diligent and you check all of those boxes every month for years on end. It is like a longest of a long shot to make this work if you don't have somebody helping you along the way. And that's why most people can't figure it out. So we hear from borrowers constantly through our organization that have run into the same kinds of problems that I imagine got you to sign up for this webinar. These are the stories that the government needs to hear from public service workers so they can finally do right by all of us. So far, 35,000 people have shared their stories with the Department of Education. Lots of them have been social workers. We can do better. We have another couple weeks before this closes. We're going to keep pushing everywhere we can, including you guys, but people all over the country are hearing from us, do these webinars, talk about the opportunity here, try to get people to share their stories so we can do better next time. The deadline for stories here is September 24th. Particularly, the best thing you can share is if you have a COVID story. That's really what the Department of Education needs to hear right now, how hard it is to manage having student debt, even with your payments paused, just having that threat of your debt looming over you as you're serving in your communities during this pandemic, dealing with the hardships that the pandemic caused. That's exactly what we need to share with the Biden administration, because part of how this works, part of what the way forward looks like, is the Secretary of Education using these emergency powers that he has because of the pandemic to cancel your debts for you. It's the same emergency powers he used to pause everybody's student loan payments, to cancel the interest you would otherwise have been charged during the pandemic. Secretary Cardona can use those powers to cancel student debt for public service workers. He just needs to be told that this is a COVID problem, in addition to the decade of mismanagement and abuse that we all know took place here. And so if you have a COVID story in particular about how hard it is to manage your finances, your life in the middle of this pandemic while having these debts looming over you, even if you don't have to make payments right now, please share that story in particular, and do it by September 24th. I am going to end now by answering questions. I thank you again for the opportunity to present. This really was a fantastic, you guys are a fantastic group, and I'm so grateful for your service. If there's anything else that we can do to help, you could always reach out to the Student Borrower Protection Center directly at pslf@protectborrowers.org. That's pslf@protectborrowers.org. Now I think, Walt, you're going to pop questions in the chat, and I'm going to try to answer them live. And if you need more help, we can also share in the chat that email address. Our website is protectborrowers.org, and we will share these slides later that have the link to where you can submit your story to the Biden administration on how to fix PSLF. So our first question up is, where do we get the employment certification paperwork for our employer to fill out? So the good news is studentaid.gov is your one-stop shop for all the things you need to know about public service loan forgiveness and how to make your student loans work. Your student loan company should also have this form posted on their website somewhere, but studentaid.gov is the Office of Federal Student Aid's website. We had on the slide deck earlier, studentloans.gov. Either of those actually work, but studentaid.gov is the one where that's kind of the one-stop shop for all your paperwork. You can log into your student loan account there and learn more about what kind of loan you have. You can also get the paperwork you need for your employer to fill out at studentaid.gov. You can consolidate your loans there. You can enroll in an income-driven repayment plan there. You can avoid your student loan servicer entirely and do everything that I've listed on this website or in the slide deck at studentaid.gov if you want to. But you could also do nearly all of that directly with your student loan company if you know who that is and you already have an online account and it's easier for you to do it that way. The next question is income-based repayment based on household income or only the borrower's income? So I think this is true for lots of things in the student loan system. The answer is it depends. If you are married and you file your taxes jointly, income-driven repayment is based on your household income, but it also takes into account the student loan payments, the federal student loan payments your spouse might make. So the formula is sensitive to the total amount of student loan payments you have and also your spouse's income. But for most income-driven repayment plans, but not all, you can work around that by filing your taxes separately. And so we do see families, and in particular public service workers, where one spouse has a lot of debt and it has a pretty low wage public service job. And it's really important that that person get loan forgiveness. And that is more important than the tax benefits of filing your taxes jointly. And so they'll file separately so that that public service worker can minimize their income-driven payment and qualify for the most loan forgiveness possible. So there is a way to do that so that they don't have to count your spouse's income. The next question is, with the recent COVID relief pause, with months counted as payments, what about people who have been enrolled in school under deferment? Will students under deferment also get credit for paused months? So that's a really good question. And again, I think the answer is it depends. If you are in school and you're taking on loans right now and you've never left school before, it's uncertain whether the Department of Education is going to count those months if you're also a full-time worker. If you have left school and then gone back to school to get a master's degree and you have loans from undergrad, for example, that's what's called an in-school deferment. You've deferred loans after entering repayment. Those months will definitely count towards public service loan forgiveness. The rules the government put in place are for basically anyone that's deferred their loans for any reason. The rules of the payment pause supersede that deferment. And so if you're back in grad school and you have loans that you didn't take out to pay for that program, but loans that you carried with you back into grad school, all of these months where you're in school working full-time are months that will count towards PSLF. So I know that's kind of a complicated answer. There's more information, including a really long FAQ up on studentaid.gov that talks about how these two programs intersect. And we do know that it's really not clear, but the good news is for folks that have already graduated and are going back to grad school, that period of time for their older loans are going to count towards PSLF. The next question is, I'm in my last year of my MSW program. What should I be doing now to prepare for after graduation? I graduate in June 2022. Well, the good news is that by the time you graduate, a lot of the doom and gloom stuff that I talked about will already have run its course. You'll be entering fresh with a new student loan company, assuming that your loans are just grad school loans and that you don't have other debts that you've been carrying around with you through grad school, which isn't always a safe assumption. You're going to be starting fresh with a new student loan company. You don't need to worry about the chaos that's going to happen after the payment pause ends. You're not going to have to worry about your servicer changing. What you need to know is, most importantly, you need to enroll in income-driven repayment as soon as humanly possible. So, because you want every single month of full-time employment to count once you finish school. And your servicer is going to tell you to use your grace period, to take that first 6 months after you graduate and not make any payments. That grace period doesn't count towards public service loan forgiveness. So you got to opt out of it, and you need to enroll in an income-driven payment plan on your first day of work. And that's actually a really good hack for public service workers that have had income drop while they go back to school. Your income-driven payment is always based on your last year's tax returns, unless you choose otherwise. And so if you have really low income last year because you were a full-time student, that's the amount of money you're expected to use to determine your payment for next year. And so you should set up your income-driven payments starting as soon as you begin to work full-time using last year's income, so that payment is as low as possible. The next one is, during the pandemic, I worked at a hospital ER. I've moved due to my spouse's need to change jobs. I'm still trying to get a new job in the nonprofit area, but I have been out of work since June. We'll have to start my PSLF program all over. Well, first, I'd say thank you for your service. My wife is a former emergency room nurse. I know how hard that is as a place to work, and I can't even imagine how much harder that must be in the middle of a pandemic. The good news here is that your service doesn't need to be consecutive. You don't need to serve for 120 months in a row. You can start and stop that clock as many times as you want. And right now, while there's no payments due, there's really no stress in it. You're right that you're not getting credit towards PSLF while you're unemployed, and that sucks. And it's a place where we push the education department to make special consideration because of the job market during the pandemic. But as of right now, you are going to have this gap, but it means you can pick up right where you left off. And so when you do get a new job, whether that's at a nonprofit or for the government, you'll be able to just pick up and continue to make qualifying payments right where you left off when you left your last job. The next question here, how am I doing on time? Oh, we got a little bit of time. The next question here is, what can you do if you already went into default? So there's good news and bad news for borrowers who are in default. Most of the time, for most people, there are a couple ways forward here. The good news is that you have a right under federal law. If it's just the first time you've ever been in default, lots and lots of people have gone into default. There are more than 8 million people in America who are in default on a student loan right now. It's incredibly common, and it's so common, in fact, that Congress actually gives you a right under federal law to get out of defaults. And there's two ways you can do that. There's a program called rehabilitation where you can pay a debt collector a little bit of money every month, and they'll pull you out of default, and you can enroll in income-driven repayment. And as soon as that happens, you can start making progress towards public service loan forgiveness. The faster way, the easier way is to do the same thing I recommended borrowers with older loans do. Consolidate your loans. You can go to studentaid.gov and fill out a piece of paper and consolidate your defaulted loans and enroll in income-driven repayment with the same form, and get on track for public service loan forgiveness. If your wages are currently being garnished, there's a couple extra steps you need to do. You might need to call the Department of Education to get the garnishment turned off first. But you do have a way out of default if you've never gotten out of default before. If you've done this, if you've already consolidated out of default and you've also already rehabilitated your loans out of default, sometimes borrowers get stuck, but that's pretty rare. Most of the time, most borrowers have just defaulted once or even twice, not 3 times. And so they have a path forward here. The next question is, I worked in public service for 14 years. Use the previous system, I was told I don't qualify if I paid more than the amount of my monthly payment. Is there anything I can do? So there's really good news here. So this is one of those problems that I mentioned before about how the Trump administration took some baby steps to try to fix this mess. It wasn't enough. It certainly didn't do anything to make it less complicated. But there are some things that have changed for the better. And one of them is this problem. For borrowers that paid more than they owe, whose loans were put in a special kind of status called paid ahead status, you may have been told that your public service doesn't count, that you lost months or years of qualifying payments because of the status of your loan. Last year, the Education Department changed its rules and put in place new rules that say, we don't care what loan status you were in, as long as the amount of money you paid every month was at least the amount you owe. So if you paid more, you're good. If you paid less, there's still some tricks and traps you can fall into. But if you had an employer that was also making a payment on your behalf, or if you just had an automatic payment that was for $1 more than you thought it needed to be just to be safe, you used to lose out when that happened. And now those payments all count towards PSLF. If you're not getting credit for them, when you log into Fed Loan Servicing's website and you see your count of monthly payments that you get once you certify your employment, assuming you've done that piece already, if that number's wrong and you're not getting credit for the payments that you've made, submit a complaint. Fed Loan Servicing will audit your account and go back through and fix that for you, but also submit a complaint to Fed Loans regulator, to the Consumer Financial Protection Bureau. You can do that at consumerfinance.gov. That's consumerfinance.gov. That's the place you go to complain about abuses by your student loan company. If Fed Loan has miscounted your payments and they won't fix it for you, that's where you should go. The next question here is, so if I don't have undergrad loans, only grad school loans, am I good to go if I start paying my first payment once I graduate? Assuming you are still in school right now and you have not been in grad school for 11 years, yes, you are good to go. It means the loans that you took out to pay for grad school anytime this decade are loans that are the right type of loan. And all you need to do is enroll in income-driven repayment and work full-time, and you are going to get public service loan forgiveness as long as you check up on your account and make sure you're checking those boxes. The next question here, did I hear correctly that the pause repayment loan forgiveness period does still give credit towards the 120 months for those who are graduates and working full-time? Yes, that is correct. So this period of time since March 2020, when everyone has had their loans paused if the government owns your loan, that is qualifying service towards PSLF. And you are on track. You need to make sure you still have the right type of loan. So that's the other kind of hitch there. But if your payments are paused and you have a direct loan, every month you've spent working full-time during the pandemic counts towards PSLF. Next question is, if I worked at a, sorry, it's just bumped up. If I worked at a nonprofit for a few years, but never provided paperwork to a loan servicer for loan forgiveness, then was unemployed during a year of grad school, and then I started a government job, will I still get credit for those years prior that I'd not turned in paperwork? The answer is yes, absolutely, as long as you have not consolidated those old loans with your new loans. If they're still separate loans and you made payments on them before, you'll actually have two different sets of student loans, each with a different timeline for public service loan forgiveness. So you'll hit 120 months on your older loans far sooner than you will on your grad school loans, but you can make progress on both separately, on separate timelines, and get credit towards public service loan forgiveness for both sets of loans. The next question is, do you know if FedLoan is processing annual income updates to IDR during this payment pause and or during the servicer transition? The answer is yes, they're supposed to. We've heard from borrowers that they haven't been, and that there are significant paperwork processing delays. It's another place where we're worried and we're watching, but you are allowed to update your income and to make sure that FedLoan servicing has the right amount of money to charge you as soon as it has to send you a bill. That's actually a very good idea, and you should be doing that. But we have heard that borrowers have run into trouble with basic stuff, even just getting FedLoan to reply to income-driven repayment requests right now. The next question is, I've received inconsistent responses getting employment certified. Where does one go for help with this type of issue? So I think a great place to go for employment certification issues in particular, and I haven't mentioned this office yet, but there's an office called the Federal Student Aid Ombudsman. This is the independent watchdog that's based at the Education Department that helps borrowers with really complicated problems with their student loans. There's a website, you can find it also at studentaid.gov. It's called the FSA feedback system. And if you submit a complaint there around employment certification in particular, that's the best place to stick the ECF problems. It may not make a lot of sense that I've told you to complain in different places. If you have it in you, it's always good to complain there and also at consumerfinance.gov. The different regulators look for different things, and you can sometimes get different answers from FedLoan and from the Education Department. And so it's important to make sure that like the government is watching and everyone's looking at your problem together. And so filing complaints at the same time with both regulators is often the best way to fix these problems. That's particularly true for ECF issues because there's this weird interaction that the Education Department staff have with FedLoan where determinations are sort of made by the government, sort of made by a contractor. And so you really want to ask for help directly from the Education Department and also from FedLoan Servicing's regulator. The next question is, I have undergraduate loans and graduate loans. I went to grad school several years after I graduated from undergrad. Oh, no, never mind. I'm at 120 payments on my undergrad loans. Will they forgive both? I sort of answered that question before. They'll forgive your undergrad loans and you'll have more time to go on your grad loans. FedLoan Servicing is actually tracking your two sets of loans on different timelines. And so they'll make sure that you have to hit 120 payments on every loan, not just 120 payments on some of your loans. I think this is probably going to be our last question. It looks like it's the last one in the queue, and we're winding down here. I met the 4 criteria for PSLF. However, FedLoan still says a handful of my payments don't qualify based on my last ECF. What are some possible reasons they say they do not qualify if I can prove they were on time and for the correct amount? So I mentioned a bunch of these little ticky-tack things that don't make sense to normal people, but are how the government has run this program in the past. One of those is if you had 1 month somewhere earlier where you paid slightly more than you owed, they might have put your loan in a status without you knowing that wasn't a qualifying loan status. The same thing can happen if you had a month where you paid slightly less than you owe. If for some reason the money that was debited out of your account for your automatic payments fell short by 50 cents, that can knock you off track every month in the future as a result until that 50-cent shortfall is caught back up. There are new rules being put in place to fix all that stuff so that under the new rules, you wouldn't lose credit for those payments. And you really just need to figure out how to get somebody to take a look at those missing payments and determine whether, based on the new rules, you're good to go, which it sounds like you are. I would submit a complaint at consumerfinance.gov, and I would submit a complaint at studentaid.gov and just say exactly what you said in the chat here and provide any paperwork you can provide to document that. And you should be able to get credit for those months and get loan forgiveness now instead of having to wait longer. Thank you again, Sarah and team, for having us here and for hosting this with us. This was really a great opportunity to be able to talk about PSLF and help answer some questions here, and also to help you all get involved and help Joe Biden do right by public service workers.
Thank you. Thank you so much.